TSPY advertises daily income, but here's the twist. The payouts don't work the way most investors think they do. And once you see the real numbers, you might question everything. Today I'm breaking down the actual income, the real world yield, and what a full TSPY position would really pay you. Welcome back to Simply Money. The TAP Alpha SPY Growth and Daily Income ETF is built for one main purpose: to give you steady daily income while still allowing some growth over time. It does this by tying its performance to SPY, the main ETF that tracks the S&P 500. You'll still get exposure to the US stock market, but with a twist. The fund uses an option strategy that generates income every day, and that income is paid out to investors. The trade-off is that while you still get some upside when the market goes up, your gains are capped. In other words, you get consistent daily income, you still participate if SPY rises, but you don't capture all of the upside because income is the priority. This ETF is designed for people who want steady cash flow first and growth second, as long as they're okay giving up some big market gains to get that income. Now let's dive into the spreadsheet. For those just joining the channel that have never seen these, this is my all-in scenario portfolio. This is a hypothetical if I took my entire income portfolio and I invested it into a particular fund. We've been doing a series on this where we look at different funds. We've looked at ULTI, NVYY, QDTE. Now we're looking at TSPY. We're going to do this with other funds as you continue to share what funds you'd like to see this scenario run on. We're going to look at what would happen from the day of inception if we owned this with a full portfolio. We went all in. Now, this is for educational, informational purposes only. This is not financial advice. I do not recommend going all in on this fund. In fact, I don't recommend going all in on any fund. This is just for entertainment purposes and some education to see how it performs and what would it look like if we went all in on this type of fund. Now we're going to look at three scenarios to begin with. The normal 100% drip if we owned it and we just dripped everything back into it. If we did a 50% drip, and if we did zero drip, meaning we just took the full income for ourselves. Then we'll look over at our adjustable drip rate and see what we need to drip in order to maintain the same balance throughout. Whatever the balance started at, we want to end at that same balance and then take the rest as income. What percentage would we need? We've done that with the other videos to get an idea of how much you actually need to drip to maintain your balance. Now, this fund is fairly new, August 24th of last year, 2024. The share price at that time was $24.92. That got us, with our $525,000 hypothetical balance, would have gotten us 21,067 shares. As we look, this is a monthly paying ETF. This pays once a month, and we are going to look at these distribution amounts and the share price. As we go down month over month, you can see pretty consistent here, 29 cents, 27 cents, up to 30 cents. It's been, for this past year and couple months, it has been very consistent. The last 3 months have been right at 30 cents. See, the share price is actually slightly up from when we first bought in. It has had a pretty consistent year and 4 months. It has been very consistent with its share price. It's been very consistent with its distribution. We don't see any major drops. The biggest drop here is down to about $22, but then it's come right back up, which is always a good sign with these type of funds. If you have a big drawback in the market with S&P 500, SPY, the Dow Jones, the NASDAQ, if any of those have major drawdowns, these covered calls that follow that, you want to look and see how do they recover. You want to watch the trend lines. When they go up, do they come back up? We know they're not going to gain all of the upside, but do they gain a good portion of it? Because that's important. Funds that don't gain it all back, as it keeps dropping and having these downturns, it keeps losing more and more and then can't recover on the upside. And really be careful when you have funds that follow the trend down but don't return back up at all or very minimal, and so they miss out on almost all of the upside. And then when the market comes back down again, it's starting even lower. So the trend lines just keep dropping. That's where you'll see that NAV decay on those. This is, in these few months that it's been around, has shown very strong consistency. As we look at the distributions, this is monthly now. You've been averaging about $6,000. It's built up here to about $7,500 as you've reinvested this. Every month you're getting about $6,000. Now would be about $7,000. But you've been buying more shares, and that brings our share total on the full drip up to 25,391. You've gained 4,300 shares as you've reinvested these distributions. The share price has gained about 1.77%. The average distribution amount has been almost 29 cents. And as you look at that, that average is right in there. I mean, it is very consistent. This is one of the most consistent ones I've seen throughout these experiments that we've been doing. Very consistent payouts so far, which is nice to see. Again, very consistent share price as well. With this reinvestment on 100%, your share value has gone up $118,000. You've gained about 22.65% in about 16 months time frame. A nice return, healthy return. The only red we're seeing here is right after the April tariffs, but it bounced back nicely following the S&P 500. So your balance now would be $644,000. So a nice return on that. Now with the 50% drip, what we do here is you take 50% of whatever the distribution is, which is this amount. This amount represents 50% of the distribution. This amount is being reinvested into more shares, and then you're taking the same amount and you're able to use that for living expenses. In this scenario, you can see that the price has increased some. It follows this, but not as quickly in the gains because you're only gaining half of the amount. It's not going to grow as much. And you can see you've gained 2,067 more shares by reinvesting this amount, but you've also collected $51,000 in income. In 16 months, you've gained $51,000 of income, and you've gained $2,000 worth of shares. Your portfolio balance has gone up to $586,000, a gain of about 11.75%. Now that brings us to the zero drip. You're just using the income. You buy into this fund and you completely just say, I am going to keep all of the money out and let the fund do what it does. Again, we haven't seen any major downturns on this. We don't know how it would perform over long term, so something to keep in mind. We'll do an update on this one again down the road once it's had maybe another year to test the waters to see if the consistency remains. But with the zero drip, you're getting the full distribution. After 16 months, you're looking here a little over $6,000 a month. This would be a nice addition, in my opinion, to a portfolio. Obviously not an all-in scenario like this, but if you put a small portion in, if you wanted to create some steady income, and you can see that your portfolio balance would stay relatively flat, your income would stay relatively consistent, so it would be a nice way to supplement and get some extra income. So if we did a $50,000 scenario like we do in some of our hypotheticals, then you'd be getting $630 a month off a $50,000 investment. So that could help supplement, put a small portion there, and still maintaining your balance because we haven't added any shares. We've been able to collect $97,000, and we have gained about $9,000 of appreciation in the share price, which you can see there was quite a bit of red here as we went through the slight downturn the beginning of the year, and it took a little bit to recover, but it recovered it and has been holding pretty steadily since. In these three scenarios, you can see the full drip. We gained $118,000, which was a 22.65% total return. The 50% drip, we gained $51,000 in income, plus the $61,000 in appreciation. That's $112,000 here for 21.47% total return. And with no drip, we've received the $97,000 income. We've gained about $9,000 in appreciation for a 20.37% return. In 16 months, all three of these have performed really well. This is probably one of the most consistent ones we have seen. No matter if you do the full drip or no drip, your percentage total return has been very close. This is a really good sign for a covered call fund that's trying to generate income while maintaining some growth. Nicely done on this one, I would say. In my opinion, this is a really strong performer. What are your thoughts on TSPY? Do you own it? Are you thinking about it? Do you like seeing videos like this? Is there another fund you'd like to see? Throw that in the comments below. Now with this one, because we ended up positive, we don't actually need to do a scenario of what percentage do I need to drip in order to maintain my balance. You could take 100% distribution and you would still maintain your balance. On this particular fund, doing this over here where we can adjust the distribution is a moot point, because if you say, I just want to maintain my balance, even taking 100% distribution, your balance actually grew slightly. You could still play with this to put it to where, what do I need? Maybe I need $4,000 a month of living expense. I need to generate income of $4,000. Or if you're doing a smaller starting balance, again, maybe the $50,000, and I want to generate X number of dollars, you can play with this here and put the 20% and see what would that generate based on my portfolio balance to begin with and my start date, back testing it, how would it have performed? Okay, so this would have generated more. If I needed 4,000 a month, it would have been generating more than I needed. So maybe I could go to 30% drip. And so we put that in there. And so now we're a little closer. We're right at $4,000 every month. And you can see that it's growing slightly because we are reinvesting 30% and we're keeping out the 70%. So we're still getting a slight pay raise to counter cost of living inflation adjustments. It's a nice way to play with that. If you like that and you'd like to get a copy of this, this is the TSPY all-in spreadsheet, which can be found on my Buy Me a Coffee page. I appreciate those that support the channel through that. It does help us produce more videos, and I'd appreciate if you can hit the like and subscribe button if you haven't. Those are the ways that best support the channel and get us out to more viewers. That's TSPY. What are your thoughts on this? Leave some comments down below. I'm actually going to be looking a little deeper into this one, to just a small position for myself. And I just got to compare it to some of the others that I have to see if it would supplement or maybe replace a little bit of something. But I definitely like diving into this fund a little bit more and have been impressed with what I've seen thus far. So thank you for joining me, and we'll see you next time on Simply Money.